Hey guys, what's going on? So yeah, just essentially wanted to make this cool little short video. Well, I usually say short, it usually goes on for quite some time. Just kind of catching up. So happy New Year, guys. It's been a pretty good last year. In terms of percentage return, I don't really know exactly how much, but I know it's definitely up there. Had some good news as well. I passed a 60k funded assessment recently as well, with the opportunity to scale to over 5 million, which is amazing. So that's something that I will be working on throughout this year. On top of that, still working on getting more capital as well, just to kind of grow that. Working on a competition as well that I'm doing with Accountability Group as well, which is pretty cool. And just a few little bits there. I think one thing that I've realized as well, working within a group, it's definitely interesting, very interesting in a very good way, because it's just challenges you in a completely different way, which is cool. So looking at a few pairs this week, this is my top 6 and wildcards. You can see that obviously I have some filtered in here. No soft watch this week. Pairs are looking pretty good, to be fair. There was a lot of sort of opportunity kind of shaping up in there. It's selling off now, so it's not really giving me exactly what I need yet, but it can still come back up here and go for the sell. So I'm not too convinced to kind of just get in on a short just yet. I will wait, otherwise continuation to follow. GBP USD, likewise, right now it's just a bit premature. It could still come lower before it goes higher. We have to wait and see. We are seeing a very similar thing across the board, so I will just wait patiently on that. Right now it's just too soon to tell. We could come all the way back down there, but it's not the most likely. I think what would be interesting though, to see if price does somehow come back into these areas, and then we get some sort of push up flag, and then we go. But I am interested in the short, not the long at this point. But would I entertain a long? Possibly. It would be very situational, and to understand the risks there, I think coming up with that 1, 2, 3 would still be pretty nice. So I think that's the only time I would entertain the long, as insurance entry from there to go long. Looking at EA as well. EA, it's not bad, to be fair. It came in with the impulsive approach, so I would still wait for a insurance entry from here. Something which kind of just comes into this area here and then just starts to begin to continuation to downside. That would be interesting for me. Only reason being is just it pushed up too aggressively. I was looking for more of a corrective approach if we did come back up to that high. We didn't seem to get it, or as the market opened, or pre-market opening, I was looking for the continuation down here, but as soon as market opened, we just started pushing up higher. It is what it is. Just means that we have to be a little bit more patient, and I think those are the skills that you develop as a trader, and it makes you better. Euro GBP as well. Still waiting on this one to formulate. I am going to be looking for the entry from there. I don't think I'm going to be taking I know for sure I won't be taking a risk entry at that point. If we did kind of take a bit more time and just correctively get there with some more structure, possibly I would opt in for that if there was an internal pattern within that and it all just shaped up 2 tops, 2 bottoms. But more than likely, an insurance entry is the best bet for me, just given the positioning and so many different factors. I think I'll be happy to do that. Swiss yen, I think Swiss yen is phenomenal. Looking at it on daily, we've tapped into the high value area. This is creating new highs. Nice little pin bar there, and now on the 4 hour we can see that we are getting more commitment, which is also very good. Originally I was looking for continuation below here, but we did aggressively push back up, and now we're just kind of just messing about a little bit. Does seem a little bit like Swiss related sort of Swiss type of characteristic here, where it's just very messy. But like I said, at the same time, nothing changes. Still looking for that continuation. If we get something very clear as day, more than happy to take that. That would still fit my plan. It would still be in the continuation run, and then I would essentially look for something like that, and I'll be good to go. So I'd be happy to take that, and then I'll be taking that into probably around about here. I'll get out a little bit early, around about 15-ish% if that trade was on. Perhaps maybe even 10%. I'd be more aggressive around about here, just because you'd be running around about 10. So I'd probably be locking in around about at least around about 8%. And then if I did get taken out, it is what it is. Understand that there could be another continuation here for a hover, and then we could just push out to that point there, so you can get in for another entry. I'm not going to be greedy. I'm going to be more conservative and just kind of lock out if I need to. Germany as well. So I was looking at this trade shaping up. Obviously, it's not the best position that you could have taken, really and truly, but looking at it from a top-down analysis, you are playing the high time frame here, so we are looking for the momentum to kick in. We are looking at a very clear run to the downside. I think there isn't any clear inflection points along the way, which is very nice. You can see here that we have that area here. Now we're going to be trading below that. This is the sort of acting as the inflection area where we're getting that continuation. This is corrective on the start, but we can aggressively just sell off. I've seen it hops and hops amount of times, man. Honestly, it is what it is. So one thing I would just say for sure is you have to stay sharp, because we do have a near miss there, but at the same time we can still come all the way back up here before we sell. We just have to be very, very on the ball with this. But then if we do start to sell, we could get multiple opportunities in terms of continuation, and this is the sort of run that I'm looking for, is where we kind of drop off, we get something else, we drop off again, and then maybe something like that, and then we kind of just come in here, and then and then the next thing is like you've just got all these entries. And when I say all these entries, I mean I'm talking about 3 extra entries here, where you've basically got your one on this, you've got one in here, and then you've got another one in there. I mean, obviously I'm looking at the risk entry on these. Situational, you could take insurance entry, you wouldn't take the reduced risk entry or something like that. This one you could opt in for a reduced risk entry, because then you'd be sizing up your risk reward to that low. I think one thing which is extremely important is don't get put off by having sometimes a little bit of a larger stop as well. You can squeeze in a tighter stop on these pairs for sure, and you can definitely make a lot more, but yeah, this is just one. So I did take this position, and I understood the risks. Situational, I was in a good place to take it. I just think that for a lot of people, it's one of those ones where you would wait for a little bit more, but I think there was more than enough here. We had this near miss to it, near miss again, then we took it out, we took out that, and then we left this sort of bit here, we took that out, still came into that area of value. We didn't quite take out the high, but we didn't need to, and then we just kind of dropped off. As I kind of went into the 15 where I would have looked for it, I was like, okay, that would be the entry, but I would wait for one more candle just for that extra clarity there, and then I took it on the close of the next candle, and it just kind of pushed a little bit higher. It is what it is, and then basically got in at a better price. 50 pip stop loss. It's pretty big, pretty big stop loss, to be honest. And I think that's something there as well, which definitely could be refined on a better trade. You look at from here to here, that's 10%. If you were to be able to, let's say that you got a consolidation here and you got a nice little flag, and you could even squeeze in roughly around about call it 15, even to around about here, you've got 10%. So sometimes you have to really ask yourself, in terms of positioning, where does your edge really play? Because a lot of the time, like for example, let's just say you took a trade, let's say that this was perfect and it shaped up, and you took the trade here, and then it just went, and over here you probably wouldn't have been aggressive, but this dropped off for about 20% odd. So you could probably be very conservative, say 16% you got out with, maybe a bit more, and just for that one run alone. So something that I think definitely most people should pay a lot of attention towards is just understand where your edge really is in the markets, because you don't need to take a massive stop loss a lot of times. Sometimes if you can be very particular and know what you want, and say that you know that you're going to be taking an entry right here, for example, and you're more than happy to take the risk at 18 pips, then to that low you're looking at roughly around about 10%. So just certain things like that I think are very important to understand, that you don't have to always take these large stops. I mean, in some ways you can convince yourself in the moment in time that it's safer, it feels safer to you. You take the 1 hour entry, and I think this is where over time the refinements come into play. But let's say you can crop through that wick there, and you take this at 26, to the low here of the 90%. Let's just say over to about this point you're looking at 2.5, right? And then let's just say you refined, and there was an entry in here. Obviously this isn't the clearest entry and it isn't a entry, but let's just say there was an entry in there and you were able to squeeze that in for around about 10. Naturally, of course, 10 is very aggressive, and I wouldn't expect most people. But then you're looking at the difference of 2.5% to 10%. So then you have to ask yourself, like, at the same time you're risking near enough the same amount, maybe 0.5% to 1%. But even if you risked 0.3%, you would have made more percentage and put less risk on the table, but you would have had more of an aggressive stop loss. And without the knowledge and the capability, you would have probably lost 0.3%, but you could have taken that trade 3 times, essentially is what I'm saying. You could have taken that trade 3 times, and the amount you would have made, the same amount you would have taken with a larger stop. But you'd have to really understand your game. Over here as well, this is one that was sized up. We can see here that we had a 1, 2, 3. We did fill it with full price action, which I did like, but the only negative confluence here was the wick, which we knew that it could be filled, but because I saw on the one that we did fill it with full price, and we did have that somewhat of level middle section, if we commit, we're going. So now I'm just looking for further continuation. Was there a trade in here? I guess arguably yes. You could argue that there was a trade, but it wouldn't have been easy to identify and wouldn't be the best positioning to take it. So, you know, very, very situational in my opinion. I'd say that's on the much more higher risk side, and a lot of people wouldn't take it, but you could have taken the trade up here for sure. You would have then come in with, you could have even said 10 pips just to be extra conservative there. Yeah, call it 10, and then to where we are now, you're looking at roughly around about 2.5. And I guess that comes into the same thing we said before. You know, if you could refine that, you would. And you know, right now there's really no room for that. But let's just say that, for argument's sake, that this did shape up and it was clean and it had everything you needed. Once again, let's say that you had your confirmation here on the 5 because you were able to go to that time frame. You didn't have this massive sort of sharp pullback there, but everything was good. Even over here, you know, you could squeeze in. Yeah, let's say you squeeze in around about 1.5. 1.5 is probably your best bet. Yeah, you're looking at pretty much, you would have already been running 10% to current price, but you'd be running around about total of like almost 13. So, you know, that would have been pretty much decent in terms of positioning and stop size and everything. So that's why I would say, if you're going into this year, I urge you to not jump on the 5, but to definitely master your 1, master your 4, master your daily and your weekly, and then with the refinement go into the 15. And then where you would take your 15, for example, I'll just put one on over here. I'll bar replay this quickly, and over here, let's just say, oh, even better actually, this one right here. So price is broken above high value area, and then it's created this little footprint zone here. This is beyond more than perfect, and you can see that on the 15, on the 1, you can see it's a bit more clear as well. You have more than enough candles. You have the 1 hour entry over here, which I think possibly is enough, but let's say, so you got about 5 over there, and then you look on the 15, and you do technically have an entry right here. So you could have taken it with a little bit tighter. You could have gone 3, and then if we went to the 5, yeah, you could have gone a little bit more tighter than that as well, and you could have even taken this one here, but you would want to cover that high regardless. So it'd be near enough the same, but you could have taken that with around about 2.3, let's say, and then that's it. That's literally the level of the refinement you'd get to, and then you'd let that play out. And then in terms of it playing out, if I can just zoom out here, get back over there. Yeah, easily to that low of the pattern, you would have been looking at about 3. And then as it was breaking lower, you would have anticipated it to go lower. It didn't, so you would have probably come out of the market with roughly around about 4%, really and truly. But still, for a well anticipated trade there, that would have made sense. And then you'd zoom out, you'd manage it on the 1 anyway. So really and truly, would I say that's a bad trade? Not at all. Could you have taken any other trades here? Not necessarily anything that jumps out to me, but there was this where it kind of just scooped up, tapped into that, and then sold off. And then we created this, and this was the clearest large flag that we had. So now it's just a matter of continuation. So, and I just wanted to share that. I think it's very, very, very important to look at things in that perspective. We do have CAD yen, not exactly the structure shape I'm looking for, I'll be honest with you, but we do have these 2 clear tops, 2 clear bottoms. A reduced risk entry would not suit me at this point, but a risk entry would for sure. So how I'd be looking to take this now is if we can just pull back up into this area, whatever, we get back up here, confirmation in here, push back down, and then we go. It could just sell though, that's the only issue. Not bothered though, really. It obviously would be nice if it did come back up here, and then we did that, and then I could probably get in with a 10 pip stop loss, probably call it about 12 to be extra, just leave a little bit extra room there, and then that could be good to go really. So that's something I would suggest, but by the time I upload this video and you watch it, it's probably already moved, so it's probably something that you can definitely see and learn from. But you can see the reasoning behind it, right? We have pretty much 1, 2, 3, 4, 5 hourly candles. The next hourly candle would be up here, then we look for confirmation in the sell, giving us 6 hourly candles, which is more than enough at that point. Hits my validation criteria. We are in this sort of larger flag here, where we've kind of, if I go to the 4, it's a little bit more clear, but we've tapped into the low with a wick, and I'll just invert the chart quickly and you can see this, right? It's not the most convincing sort of reach, and we tapped into it, then we pushed back up, we near missed it, kind of took out this liquidity area here, pushed down, created that little point here, pushed up, came in with a 1, 2, 3, tapped into this, and then we pushed away. So that's why this sort of area could develop into something larger to sell, which I'm fully aware of, hence the forecast over here. But at the same time, we can still come back up and then push into here, because we have kind of tapped into, let's say you've had this, you broke the low, you created a near miss, you tapped into it, you didn't quite break it, and then you pushed away, and then you came back in, you broke it, and now pushing back up. So you can see over there, in the perspective of what we're actually looking for, continuation to the downside wouldn't necessarily be a bad idea. So very neutral in terms of the larger picture, but understanding that the higher probability is that we are trading in line with the higher time frame trend, which kind of is correctively moving sideways, but to the downside. So we've tapped into the lower end of the range with a wick, but are we going to just come back down and fill that one more time before we move higher? We'll have to wait and see. Euro New Zealand as well on top of that. I do like this one a lot, to be honest, and I'll kind of express that here right now. So I was looking for the long, but my partner pointed out a very important thing, right? At this point here, price was looking absolutely stunning, right? So yeah, I was pro long on this. This is my forecast for it, but putting that aside, just looking at what's happened here, okay, you've got, let's just say you've got this as the 1, 2, 3. So just, even if you look at it like that, it doesn't really matter, but you've got that as the 1, 2, 3. We've tapped into this area here, great. We have near missed that, which is fine, but we're not near missing it by much. We correctively moved lower, and if you analyze this, we correctively moved lower. We filled this, and then we sold off, created a nice pin bar there, and then if, oops, didn't mean to go to the 1, and then we pushed away, strong full-bodied, heavy-bodied price action, which is nice. Looking back on the 4 hour now, we can kind of see that where we are getting that sort of push away, and then we're kind of sitting at this little inflection area, but it is acting as a bit of support here. So we're not looking for this to go completely long at this point, right? But we're looking to just see how does price react to this area. We did create indecision pin bar there, which is kind of pushing to the upside. Then we kind of want to wait for the 1 hour now, and as we can see here, as we tap into that area, this is where we want to pay close attention to. And on the 15, we can then see that we did technically have a evening star on this, right? So in a validity sense, you could take this with a pending order, for example, and give it a little bit of extra room, 19, even over there, and we could just see that play through, and then let the next candle play, and then it kind of just did its thing. And I personally wouldn't have taken that one, and we didn't take it. What we did take was this one here, because as we kind of pushed out and extended, because we were sleeping at this time, right? It's about 4 AM UK. And then we saw this one and we were like, okay, hang on again. Let's just quickly look at that. And we can see that on the 15, that's definitely a squeeze, but is it a reach? And then we saw it and we were like, hang on, this looks good. Let's go back to the 1. The 1's definitely shaping up nicely. Let's wait for the next candle, and then boom, we had a really nice push away. At this point here, this is where we decided 19 pip stop loss was more than enough. So it was around about 19 over there, and it was a little bit higher on the next candle, so it was a sell limit. And then as this happened, it just spiked up and it was a quick loss. But understanding that, you could then understand that this could have just been acting as continuation, the corrective squeeze, the fill, the push down, and then just a continuation. It could have been a nice clear run to the downside. So I definitely wanted you to see that and understand that, because I think it's extremely important that you pay attention to those fine line details, because they definitely make an incredibly large difference to your portfolio growth. So here we are now, and price is just still correcting, so we would be waiting for price to come all the way back up here to then eventually fill this, to then look for the short. So that's basically it, and what I'm looking at for the week ahead. Obviously this one could easily be a break even. I think more than likely, if we didn't get the commitment here, more than likely it could become more complex. I would just wait patiently, because we could see something like this comes back up into this area and then we sell as well. We've got a nice little point over there. It's just price is kind of becoming a little bit more complex as we don't commit. So you don't really want to be in messy market conditions like that, really and truly. If it's just going to mess about, you just want to wait and let it commit. And then once you do get that solid commitment, and it's trading down here, then any continuation down there is going to be even higher probability, because it kind of just invalidates the idea of all of this being one corrective price action to come back up. And then even though it is kind of still within that, you still have impulse correction, continuation, and so forth. So just wanted to kind of point that out as well. So we will have to wait and see how this formulates and moves. More importantly, Swiss yen, definitely pay massive attention to that this week, because I think that's definitely going to have massive opportunities. CAD yen as well, definitely looks good. Aussie yen, I was looking to see how this would formulate. Right now I'm seeing if it does come back down into there, but I think these are the main ones I'm looking at right now. Obviously data changes. If we do get something completely different, we can go with it. Euro USD as well. If we can come all the way back up here, the correction does become a little bit larger than the impulse, making it a little bit more neutral. So I think personally I would be waiting for a little bit more now. Something more so on that, with some heavy bodied price action pushing back in, clear continuation, and then impulse correction, continuation to downside. Gold, similar situation as well. I just want, like, the nice thing I'm seeing about this right now as well is you can see, even if you look at it like that, you have two clear bottoms, even within it, but you have 1, 2 bottoms, section 1, section 2, section 1, section 2. And then you can actually look for a 2-touch flag, which I think is also very probable. But with Euro USD as well, reaching, I'm not going to use a 5, sorry, but the 15, you can then see over here, we could be creating something within that. This could easily develop into, whatever. And then next thing you have your flag within there. Not the one that I'm looking for, to be honest, but there's definitely room for a lot of variations, and I think the best one to do is just look at that area there and then look for your insurance entry and just keep it that simple, and that's as simple as you want to make it. If it does that, then you're in for a good trade. If it doesn't, it is what it is. The Germany 40, the thing about it is, even though that we pull up here, doesn't mean we still can't sell. The market needs to convince you you're on the wrong side of the market in order for it to move aggressively. And I think, yes, there is that aspect but this is still bearish. Even if I invert this, you can see it over here. And I'll just remove this one here, but you can still see it in terms of the bigger picture. Does that necessarily look so bad? Because this kind of reminds me of Euro USD at the beginning of its run over here. As we saw it down there, it kind of started off like this as well. I'm seeing the same thing on the Germany 40 now as well, where it's not looking its best, but it definitely has very nice potential. So I just want you to pay attention to those little small fine details, because sometimes the beginning of the run doesn't necessarily always look the best, but then it turns out to be one of the most phenomenal runs that we tend to have. So pay very close attention to those fine details, and we should be good for the week ahead. So that basically just covers the watch list for this week. Don't really have much else to really say. The month's looking pretty strong, and yeah, we'll see how it goes. Hopefully by the end of January, I'm aiming to potentially have definitely got close to having the 100k, or probably trading above the 100k at that point. So that's basically the main goal for January, but not going to push anything, not going to rush anything. If the trades come, the trades come. Regardless, February will probably be the time then. So definitely Q1's looking very good for the scaling up. So we'll see how that goes. So guys, have a great week, have a great New Year's as well, and wish you the best for this quarter. Take care.